Dear students, we'll solve one more problem on the assessment of companies applying math. This is video number 6. So, XYZ Limited is engaged in the business of manufacture of toys. Profit and loss account is given for the year 1920. This is the previous year, and assessment year is 2020-21. Okay, profit and loss account is given. Further, some additional input is provided here. General expenses. Here you find general expenses, say 12 lakh. Of that, payment to National Laboratory 10,000. This item is allowed, but not 100%. It is 150%. Weighted deduction of 150% is allowed till this year. Next year onwards, it will be 100%. Anyway, this year it is 150%. Therefore, 10,000 should be added back, and it should be deducted at the rate of 150%. Therefore, 10,000 should be added while computing business income and deducted at the rate of 150% of this, that is 15,000. Penalty for breach of customs law. This is not at all allowed. So this is disallowed while computing business income. Payment made in cash. If payment is more than 10,000 in cash, that's not allowed. Therefore, entire 32,000 is disallowed. So that should be added back to the net profit while computing business income. Depreciation under Section 32 under Indian Income Tax Act is allowed, which is allowed 10 lakh. Whereas what is debited by the accountant, so it is 8,20,000. So what we can do is 8,20,000 we can add to net profit as disallowed item, and will deduct 10 lakh from the net profit, which is allowed as per Indian Income Tax Act. Or else net value, that is 10 lakh minus 8,20,000, that is 1,80,000, can be deducted from the net profit. Only one treatment in that case. Alright, next, following losses are to be set off. Okay, 6 lakh. Only brought forward business loss is there for tax purpose. Therefore, while computing business income or total income, you can set off 6 lakh against the business income. If business income is available, 6 lakh can be set off. Then for accounting purpose, that is, while computing book profit, you have to deduct either 5 lakh brought forward business loss or unabsorbed depreciation, whichever is less. So of that, 3,50,000 is less. So this is deductible from the net profit while computing profit. Long-term capital gain not included in above 3 lakh. Okay, while computing total income, under the capital gains, you have to take 3 lakh also. So it is not there in the profit and loss account. You find here only short-term capital gain. So you need to add this 3 lakh also while computing total income. While computing book profit, see, if it is already credited to profit and loss account, it is not to be deducted. But if it is not included already, then no need of adding it. This is held in one of the cases. I repeat, long-term capital gain is not to be deducted from book profit while computing from the book profit. But if it is not included in the profit and loss account already, then it is not to be added. This was held in one of the cases. So this is one. Then compute the total income and tax liability. Apply MAT. Assume total turnover in 2016-17 is below 2,50,000 crore. If the turnover in 2016 is below 250 crore, then in subsequent years also, rate of taxation is 25%, not 30%. So 25% is to be applied while computing book profit. Okay, we'll go for computation now. Let us see the debit side here. I'm sorry, not book profit, while computing the tax on total income. Tax on total income. You know, in the case of domestic company, it is 30%. In the case of foreign companies, 40%. Whereas if its turnover is below 2,50,000, 250 crore in 16, 17. Then the tax rate is 25% instead of 30%. Depreciation. So 8,20,000. You have to add to net profit while computing book profit. Then deduct what is allowed under Indian Income Tax Act. But while computing book profit, add 8,20,000. Again, deduct 8,20,000. Only if the depreciation includes depreciation on revaluation of assets, that should be excluded while deducting. Otherwise, as it is, same thing should be added and deducted. Salary allowed, income tax is not allowed in both the cases. Outstanding customs duty is not allowed while computing the business income. General expenses, so I have already explained these 3 points. And dividend proposed not allowed, whether it is in the case of computation of book, business income or book profit. Donation to NDF, this is not allowed while computing book profit, whereas deduction is available under 80G. No limit donations and 100% deduction. National Defense Fund. Advertisement, it is very much allowed. Look at the credit side. These are allowed, part of sales as well as book profit, part of business income as well as book profit. Withdrawal from general reserve not to be allowed, not to be taken, so that should be deducted while computing business income as well as while computing book profit. Short-term capital gains, this should be deducted while computing business income, and it should be taken under capital gains while computing total income. While computing book profit, it is not to be deducted. Okay, this is about the problem. Let us see how it is being calculated. Already explained everything. Net profit as per profit and loss account. Add disallowed or inadmissible expenses. That means expenses debited to profit and loss account or items debited to profit and loss account but not allowed. What are the items? The income tax, not allowed. Outstanding customs duty, not allowed. Proposed dividend, donation to NDF, payment to National Laboratory. It is disallowed, but later on weighted deduction is allowed at the rate of 150%. Penalty for breach of customs law is allowed. Any penalty is not allowed. Depreciation should be added back, then should be deducted as per section 32. Cash payment more than 10,000, so entire amount is disallowed. And items of deduction, depreciation as per section 32, 10 lakh. Donation to National Laboratory, 150% of 10,000, that comes to 15,000. Total deduction 10 lakh 15,000 from 23 lakh 47,000. And you get 13 lakh 22,000. Then less amount from general reserve, amount withdrawn from general reserve, that is 3 lakh. Short-term capital gains, which you find here. Short-term capital gain, withdrawal from general reserve 3 lakh and short-term capital gains both are to be deducted while computing business income. So business income is 8,22,000. That's one part, computation of business income. Now we'll move on to computation of it should be computation of total income. Should be computation of total income. I'm subject to correction. Computation of total income of XYZ Limited for the assessment year 2020-21. Income from house property, yes, in this problem absolutely nil. Business income, yes, already we have calculated 8,22,000. But here you find brought forward business loss of 6 lakh. This can be set off here. 6 lakh. Either you can set off here and calculate the net business income, or you can set off here while computing total income. There is no hard and fast rule. So 6 lakh is deducted. So remaining or residual amount is 2,22,000. Capital gains, one is 2 lakh short-term capital gains, and long-term capital gain given in the adjustment 3 lakhs, so totally 5 lakh. Income from other sources is nil. So gross total income is 7,22,000. And I told you donation to National Defense Fund is disallowed while computing book profit, but deduction is allowed under 80G. So donation to NDF, deduction under 80G, yes. So 1 lakh rupees. That falls under no limit donations and 100% deduction. So entire amount is deducted 1 lakh. As a result, total income is 6,22,000. Come to computation of book profit. Net profit as per profit and loss account 8 lakh. Income tax is not allowed. Proposed dividend is not allowed. Depreciation is not allowed. So totally 13,40,000. Then deductions. See depreciation. I told depreciation same amount should be deducted unless depreciation includes depreciation on revaluation of assets. If revaluation of assets is there, depreciation on revaluation of assets is there under depreciation, that part should be excluded while deducting. But here no such thing, so entire amount is taken. Then brought forward business loss or unabsorbed depreciation, whichever is least or less. So I already told you 5 lakh or 3,50,000. Of that, least one is 3,50,000. As a result, total deductions are 14,70,000. So 6,70,000 is the book profit. Come to computation of tax liability. Tax on total income 6,22,000. So on long-term capital gain at the rate of 30%, 3 lakh into 20% comes to 60,000. And there is short-term capital gain, but that's not taxable at 15%. Only if short-term capital gain is on securities, then it is taxable at 15%. Otherwise, it is as good as any other income. Just short-term capital gain should not be taken. Should be taken as any other income. So don't apply 15% on that. Alright, so here out of 6,22,000, 3 lakh is excluded long-term capital gain. So the balance is 3,22,000. On that, here I told you since the turnover is less than 250 crore in the previous year, 2016-17, rate of tax is 25% instead of 30% in the case of domestic companies. 25% of 3,22,000 comes to 80,500. So total tax 1,40,500. Surcharge is not applicable because total income does not exceed 1 crore. If it exceeds 1 crore, surcharge is at the rate of 7% in the case of domestic company and 2% in the case of foreign companies. If it exceeds 10 crore, it is 12% in the case of domestic company and 5% in the case of foreign companies. Here it does not apply, so 1,40,500. On that, health and education cess at 4%. So that comes to 5,620. So the tax on total income is 1,46,150. Tax on book profit is 15% of book profit, 6,70,000 into 15%. So that comes to 1,05,500. Surcharge is not applicable. Health and education cess at 4%. That comes to 4,020 on 1,05,500 rupees. As a result, the tax on book profit is 1,04,520. Alright, now come to tax liability. Tax liability is equal to tax on total income or tax on book profit, whichever is higher. And tax liability is on total income is 1,46,120, calculated here. And tax on book profit 1,04,520, whichever is higher. Of these two values, 1,46,120 is higher, so that is the tax liability. As the tax on total income exceeds the tax on book profit, MAT provision does not apply in this case. So MAT is not applicable. MAT is applicable only when the book profit, tax on book profit is more than tax on total income. In that case, book profit itself is taken as total income and the tax is calculated on that. Alright, here you have got certain notes as the sales turnover in 2016-17 is not more than 250 crore. Tax rate is 25%, not 30%. Since the MAT is less than normal tax, tax payable is 1,46,120. Long-term capital gain, other than exempt under Section 10, subsection 38, is not added back to net profit while arriving at book profit in the situations where the assessee has not included the same in his profit and loss account. So this point I have already explained. If it is already included in the profit and loss account, don't deduct it while computing the book profit. If it is not included, then don't add it. That is the meaning of this particular point. But if the long-term capital gains are exempt under Section 10, Section 38, then that has to be part of book profit. In other words, it should be added even if it is not included in the profit and loss. Okay, with this I have completed the problem. Thank you very much.